Joining us is one of the very best forecasters of commodities and the wider economy. He's a Bloomberg Best on jobs as well. Jason Schenker of Prestige Economics is a Bloomberg Best analyst on gold, silver, crude oil, and he's also one of the best on payrolls, as I mentioned. So does that mean, Jason, that you could have predicted what happened today in the jobs market and what it was going to do to the price of oil?
Well, we had an expectation that there was a lot of downside risk going into this report, and the truth is, actually, this is probably something better than what we could have hoped for. The truth is, it was
the jobs report?
The jobs report. And by that, I mean, last month we had said that the job was neither good enough to ease fears nor bad enough to inspire the Fed.
Right.
And this number, this was bad enough. And so really the president's going to have to do something. The Fed is likely to say something now in their statement on the 20th and 21st of September.
So you're saying that this is good because it's going to be a call to action.
It's so bad that it could inspire change. And that's the plus side of it, if there is one.
Jason, I heard you on Kathleen's radio program this afternoon. Excellent job. And she asked you if it wasn't just that we had a perfect storm of problems with the volatility, the debt downgrade, Europe, et cetera, in August, freaking everybody out and not hiring. You said, no, this is the fourth month in a row of bad jobs data. Where does it go from here? I mean, do we start seeing layoffs next? Do we go into a recession from here?
Well, we don't necessarily go into recession from here at this point. We do put the odds a little bit above 50% that could happen. But as far as jobs, could it be a little bit plus or minus at this point? Absolutely. And if you look, we're seeing really the rate of increase of jobs has been decelerating. Now we've hit zero. Could you see a pullback? I think that's absolutely possible.
What about for oil then? So what we're going to see is we're going to see oil go down. Is that what we're going to see? And gold continue to hit records?
Well, I think there's a couple things. The first thing is that, for oil and for all the commodities in general, especially the industrial commodities, if we get QE3, if the Fed does something that's stimulative on the monetary policy side, those prices are going to get a rebound. And right now, our expectation, we believe that we're going to get QE3, we're going to get some Fed action, whether it's now in September or if it's at the beginning of November, it's going to happen, but
so
Ben Bernanke has a lot of challenge.
For oil, then?
It will be bullish for oil. It would be bullish for the entire commodity space for a couple of reasons. One, it will be something that will hopefully engender additional growth. And at the other hand, it's going to be something that's going to cause the dollar to weaken. And those two factors should push up commodity prices.
What about for gold then?
For gold, it also should push it up a little bit as well, because, again, if the dollar is going down, in dollar terms, the price of oil is likely to rise.
Hey, Jason, Gary Schilling is a good friend of ours. We talk to him all the time. He's more bearish, I dare say, than you. And he is shorting the heck out of copper. He uses a different word. But do you think that's the right play here? I mean, does copper take the brunt of the slowdown in global growth or even global recession?
It really depends. The metals have kind of a mixed outlook. The industrial metals are still looking like they're poised to rise a little bit. Copper still looks all right. One of the other things we have to consider is that the Japanese damage from the most recent tsunami, there's going to be rebuilding that occurs in 2012, and that's going to put demand on copper as well as a number of other industrial metals.
Talk to me just quickly about this tropical storm on oil.
Sure.
Is it going to be a big deal?
Well, you never know. At the end of the day, right now, it's disrupting oil a little bit. I live in Texas. I'm hoping that there's some rain that eventually comes to an area where we're having a drought.
We had enough rain over this past weekend.
Yeah, there's plenty of rain here. But
yeah, we'll give you some.
It would be appreciated, yeah. But in terms of a big impact on the market, not so much. I think a bigger thing that's more disconcerting about the markets in general is that the Fed and everyone is still watching WTI as the price of oil, and it's low. It's in this sort of mid-80s range. But if you look at Brent crude oil, which is now being watched more closely as a global proxy, you're still over $110 a barrel, even though there is an assumption of slower U.S. growth. So I think that's the bigger concern right now, is that WTI is disconnected from the rest of the global world, the global oil market, and the rest of the world is still growing. And so that's going to provide some additional upside for the industrial commodities as well.
Hey, Jason, you have a fantastic record at forecasting the jobs numbers, so obviously you understand the labor market very well. What can the president do, and he may be asking himself this question a lot lately, what can the president do to give any kind of boost to jobs growth here?
I think today we saw the first sort of shadow of what could be something he can do, something within the executive branch, the EPA, ozone restrictions, lifting that, something that could have potentially had an impact on jobs. Anything that he can do that doesn't need to go to Congress, he's going to have to do it. And the other thing is something really critical to think about is the housing market. That's really a big linchpin here. If there's anything he can do to give that a boost, really critical, something Ben Bernanke spent a big chunk of his speech on at Jackson Hole talking about. It's really critical both for inflation, which is another discussion for another day, but also for jobs and for growth. Getting that housing market kick-started quite a bit, really critical at this point.
Got it. Hey, Jason, thanks so much for joining us.
Thank you.
Appreciate you coming in.